Steve Vetterl on the mic. Today's the 12th of December. Let's do a quick check on sound and screen, please. Hope everybody's having a splendid holiday season, with the exception of our crazy geopolitical virus-based world. But hopefully the vaccine's good. So I'll read the risk disclosure. Thank you for checking in. Welcome, everyone. We have a lot of new subscribers, so welcome to the team, especially some folks on our team, which is good to see. Looks like everyone had a pretty decent week. All things considered, trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin and utilizing leverage can carry an even higher level of risk that could lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest or trade any capital you cannot afford to lose, and that is a very important point. So, second part of the risk disclosure, if you're sharing any of the results from any of our software tools, which is really only allowed in designated Facebook groups, please do not use the term company recommended settings. Auvoria Prime doesn't have any recommended settings, not a financial advisory firm. We're not a brokerage firm. We can't see inside your brokerage account. We can't, as an organization, recommend brokerage firms. We just license software that you can use however you want at your own discretion. Settings do come out of the box, in many cases, ready to go, but you can always adjust them. So we have the sharing of mine or the developer settings is not company recommended. So essentially, we try to position all these calls for educational purposes. Let me switch over to another screen. All right, I have the chat window open, questions windows open as well. This is going to be a more condensed day. I have a myriad of things to do. I'm going to give you guys a little interesting story towards the end of our chat today, which should maybe be about 20 minutes, if that. So what you guys are seeing essentially is probably one of the best, and I get it, it's in small print. You can certainly see it on my Telegram channel. It's probably one of the best cheat sheets, at least from a macroeconomic perspective, on the Forex markets, and explains the difference between appreciation and depreciation. Essentially, appreciation referring to an increase in the price of the currency, whereas a decrease, it refers to a decline or a going down, if you will, in a currency, and everything else that affects that. Now, every single one of these factors, and I always joke that, you should print this off and put it on your nightstand, because honestly, this will serve you all kinds of purposes if you choose to do a deeper dive into understanding macroeconomics, which I think that, at least from a trading perspective, if you look to get deeper into trading, which I hope everybody does, learn at least a little bit of technical analysis. This will give you a good roadmap for understanding why things operate in the fashion that they do. Everything from increasing the value of an underlying currency in a country based on imports, exports. There's a lot of other fairly exogenistic factors that play into this as well. So I'll just leave it at that. Switch over to, actually, let me close this PowerPoint first. Regardless of how many screens you have, these darn PowerPoints always seem to hog them all. All right, let's get out of that. Let's go into Forex calendar. All right. Claire, you're killing me. I am going to shoot the video on that. I literally, no kidding, guys. Obviously me shooting videos, not like it's like a big deal to me, because I'm like one of those nutcase people that probably go on camera like the just difficult to deal with. Everything's got to be perfect, right? I've always had rotten cameras and crappy lighting. This is a small office because they have my damn other office closed down in my other office building, so I'm sort of stuck running the business out of the house here, which stinks. And because I don't like this office, so we're gonna be moving soon anyway, so I need a big office. Um, any case, I won't bore you with those details, but I will be shooting the video. We have like literally 3 videos in front of that that we're going to be shooting. All this stuff's going to go into the onboarding part in different facets. You know, obviously Susan is our master of events in terms of our audio video. She's working on all that, and I promise I will get it done over the holidays. So here's the Forex Factory calendar. The 12th. Looking at the 13th through December 19th, nothing going on Sunday, Monday, Tuesday. Wednesday, everything's going on. So if you're in profit, right, maybe you don't want to accept trades on Wednesday. If you're in drawdown, don't ask me the question I've answered 100 times already. Keep letting it pull itself out, right? Especially if it's throwing trades at you or if it's executing these trades for you and overseas software that is plugged into your MT4 platform. Again, I always try not to step in front of the software if you're in drawdown, right? Because I'm not smarter than the software. So I try to keep people away from doing things like that if you're in drawdown. So, but a lot of, at least our recent subscribers in Gearbox and Variable, we've ironed out a lot of the problems, which is awesome. Got the VPS stuff straightened out. We're not going to be switching VPSs anymore until the market's closed. So we won't have any of these problems of switching at the last minute and being stuck in trades for a few people we've noticed, so forth. So let your heart not be troubled in that. We have learned from our mistakes. And I apologize for the group. I always teach my kids you must take responsibility for your own actions, even though I have nothing to do with the VPS, but I will burden myself with the blame. How's that, right? I always joke, let's make Steve the bad guy. And by the way, you know, it's funny, our team uses that to their advantage, and this is a risk thing. You know, they always make me the bad guy, by the way. So, and that's okay. I got no problem with that. They're like, look, you know, you should have done that, should have done this. Steve told you to do differently, right? So if it makes you guys, you know, any more productive or your team more profitable, happy to be the bad guy. So looking at the schedule here, I probably will not have any trading systems on past Tuesday, okay? Because we're getting into closer to the holidays, as I had discussed many times in the past. Holiday trading, albeit especially in the equity markets, we're seeing some topping-based signals, at least for the short term. That doesn't necessarily preclude some sort of big craziness in currency land, but it could basically foretell a little bit of. So I'm probably not going to be doing a lot of trading personally between about Tuesday and the first of the year. Okay, so I'll post that on. Doesn't mean you got to turn your trading systems off. You don't necessarily have to run around and turn everything off or, you know, yell from the mountaintops there. But I think it's important that you understand that during any large holiday season, typically volumes are lower. And when volumes are lower and there's not a lot of liquidity in any product that's traded, high frequency systems can come in and play games with retail investors. So typically win rates are not as high around these periods of time. Doesn't mean the softwares can't do great and they can't be run through all of this period of time, right? So I certainly could be proven wrong, but that's all statistics with me and stats, and the understanding of potentials during those periods of time are a reason that I won't trade. And really, it's just a reduction of risk. So that is the story with that. I see I got some questions building up. Let's move to a quick review of the markets. All right. I would start off with S&P. You may or may not hold equities in your portfolio. More likely, you will hold equities in your portfolios going forward. I always recommend taking a quick look at the broad markets. If you're U.S.-based, S&P 500, 500 largest capitalized companies, we are at an all-time high range. Okay, so there's a chart on it. It's daily chart, tradingview.com. Here's the dollar. Let's move back to, oops, here is the DXY. Okay, black line of division It's like the division bell for all you Floyd fans out there. When we broke underneath this line, 92 basically is a serious line in the sand. If we come back up against it again, it may pose a significant resistance point. Although a couple of prognosticators were out there glimmering some hope of a dollar rip back up into this range, which would certainly go against a lot of thinking and send maybe currencies ablaze. Again, anything can happen during the holiday season. Who knows? Some whiffs of Brexit could sniff around into the marketplace. But just know that right now, for the most part, typically martingale systems work well when you're balancing in a tight range, right? Now, also note that we've have sort of a revamping. So most of the developers are going to be knocking their calls out on Thursday and Friday. My hope is that they get their notes out. Credit to Tyler for getting it out in Gearbox, which is good. I'll always put the notes in the back office and forward them to my channel as well on Saturday. Now, I do understand this poses, at least with some of the questions we got, a little bit of issues surrounding, well, don't I want to wait for Steve's call to switch your software? No, you really don't. So I'm not the one that's telling you to go demo, although I expect everybody on our team, at least that come in under us, to go through demo for a significant period of time and or the end of the year. But, I'm not the reason essentially to switch from live to demo, right? It's all based on your own experience and comfort level with understanding how things go. But outside of that, just double check one thing here. Outside of that, the decision should be made towards the end of each week if you want to trade using a different piece of software or live versus demo, which case you switch. So on to the GBP USD, and I'll get to some questions after I go through the Euro USD. If anybody wants me to take a look at any other kind of currency, ping me. GBP USD. Peaked our head, obviously, under a support level, but you notice we closed above it. So that would lend me to believe, at least in the very short term, price action analysis on these candlesticks would lead, we probably would stay in a tighter range right here. That's what I expect. Let's take a look at the weekly. You can see how so we have, at least as far as the last 2 years, seems to me there should probably be a much bigger line across here. Let me draw one. We use lime green. It's kind of a holiday color, right? Maybe not. This is a pretty solid resistance line. I would expect if we get above this, we'll probably run stops all the way up to this area, in which case any type of pair, especially if you're accepting trades manually, it's obviously typically a lower win rate for something once you break out of a given range, which I've talked exhaustively about the last 4 or 5 months. Highly suggest you go back and watch some of my other stuff. Not going to be given tons of nuggets today other than just some forecasting because of time. That's kind of my thoughts on GBP. Let's take a look at the Euro USD. Let's go back to the daily chart. I always start there, as you guys know. Notice we've broken out. A couple of dojis printed last week, and arguably just one doji right here. This is an indecision candle. It's the holidays. We've broken out. We're waiting for other stuff to take place, right? Potentially, getting some feedback from a new administration and or some voting that has to take place before the end of the year on Brexit. So I think we're just sort of in a holding pattern on this. What else am I seeing? If you guys notice, I do a lot of this stuff on Saturday morning on the fly because I want you guys to see sort of what the process is. Let's take a look at Euro JPY. Now, We've moved back up towards the high of the range right here. Notice every time these candles have gotten on the daily here back towards this. This is a much more difficult currency to chart other than just using general price action and or the support and resistance lines that I have. Probably going to be held to this point unless, something goes crazy with the euro, right? If we spike higher. So when breakouts happen, if you just jump back here, a lot of times you'll base for a tight period of time, even maybe form some flags, which I can very rudimentarily draw here. We'll break out higher from that. I don't know if that's going to happen. We could spend some time. Hell, we could go back down and test this 1900 area. Although I don't think, unless something big breaks or somebody makes some comments next Wednesday, we got a lot of central bankers talking around the world next Wednesday. Maybe we could. But typically what happens is you'll base for a period of time in a non-crazy environment and then begin to lift higher. We're looking for the dollar, obviously, to hit down to the 87 to 85 range. This is a pretty significant move down from the current level at 91. Euro JPY. USD JPY still inside that broad trend down, as evident by these two green lines, which I should probably be extending. See that? Really stuck. I think the surprising thing about this is that for a currency that's typically quite crazy, it's in a relatively decent trending pattern down. So anytime you're getting up towards the green bar at the high, you're shorting it. Anytime you're getting down near the bottom, you're going long. It's typically worked. So it's actually been pretty decent for about the last 6 months on this. USD CAD. Okay, now here is where, as I've begun to talk about this last week, just bringing in an additional currency. I'm going to shrink this up a little bit and go to the weekly. Pretty important support point, again, just like some of the other currencies we haven't seen in a couple of years. Obviously a lot of this is just, related to the weakness in the dollar, right? I mean, most of the stuff is just a pin action of what's going on in the dollar that's swinging around every other currency and the other pair that it has that's trading as well. Same thing going on with US dollar. All right, what else? Gold. Still looking fairly bullish from this is a monthly chart. Let's go to daily. What else do I want to say? GBP NZD. I'm going to talk a little bit about this, but notice we've broken below all the way back to July. Let's take a look at the weekly on this. Yeah, big support point down here. Notice it came right down and just bounced right off it at that 8482 area. Just now it's back above, holding on the support line. I think a lot of this is just due to crazy issues. All right, so let's answer some questions here. First one from Forecast. I like that. Maybe I should put that on my next car. Picking an A-book Forex broker in the USA based is difficult to do. So the question I would ask you is, because they exist, have you done enough research on your up and down line, guys? Then the other question is, why does it have to be a US-based Forex broker, right? It can always be offshore. There's a ton of good ones in offshore islands that have most of their trading operations in the UK. I'm not sure why it has to be onshore. Alan, my good man, good morning. When looking at the 100 and 200 EMAs on DXY, what is your feeling about where the DXY goes if the news on Wednesday does not meet forecast? So let's take a look at DXY. Back to the daily. We have so the 200's far away on the daily chart. Okay. So if we take the 200 and we adjust that to, actually, let me, Yeah, I'm not going to add an alert. By the way, the question I got last week is how you add an alert for the moving average lines. You go into the settings. But I would, the 100-day, I don't even need to have it on the chart. The 100 days is way above where we are. We're not even close. The 100-day, I would imagine, even above this 94 level, I could more than likely. It is. I don't have it on the chart right here because I don't really use the 200. I don't use the 100-day line on the daily. But there's all kinds of moving averages you can use. A lot of people use fib-based moving averages, like the 21 line, the 9, stuff like that. But I mean, God, it would be just an absolute crazy move up to the 100-day, which would more than likely be resistance at that point. If in fact we did get that far up, most of everything that I've talked about would be completely dead wrong, ripping back up there. It's always a chance. So you're saying there's a chance. I have open trades since the beginning of November in a pretty big drawdown. Should I just let them ride, or should I try to close them when the loss is not too bad? So the question is, Nicole, the problem is I don't have enough information to answer that. If you want me to take a look at the account, what I always tell everybody to do, and it's exactly the same thing, is and make sure, by the way, guys, you're putting questions to me in the Q&A window, not chat, right? So I can just X them out when I'm done. You guys can always send me an email. Here's my email address. Type it in. I do need, and I know a lot of people balk back at this, but I don't care. Get it done. I need your MyFX book fully unlocked. Remember, I'm not going to be sharing with anybody or anything. I delete all that stuff once I answer the email. But I do need it. It has helped tremendously. I'm going to give you guys a story on this as well. So here is my email. Should have this somewhere just like baked into this. Yeah. Questions that get sent to my email, just pretend you're a writer, guys. My mom's was an English major. She could have been a writer. She's super smart. God rest her soul. She always told me to write in full and complete sentences that I can understand. Not what do I do, right? So send me an email. Make sure it's structured correctly, including your MyFX book and your settings as well. I will always, as everybody will tell you, answer those emails in a timely fashion after I take a look at it. Okay, next question. When the things pick back up is the next question after the first year. Again, I could be wrong. GBP already went through that. Hopefully you saw that. If you didn't, let me know. GBP NZD, let's take a quick re-peek. I'll have that up on the screen. I would encourage everybody. I know things are going on. People have issues. I get it. We understand. But at some point, you guys, I would have everybody set up a tradingview.com account and start to chart all this stuff. Even if it's just the most basic charting like I'm doing, a 5th grader could do this. My son, who's not in 5th grade, he's 12, but we're teaching him how to trade. So he's already digging it big time. We just got to keep away from the crypto crap. So, Melissa, I'm not sure if you saw my Euro USD. It already came in. I already did all that. Yeah, so I'm getting a request to take a look at some exotics here. Let's see what we got. I call these exotics, but many don't. CHF. Let's take a look at this thing. Swissy yen. This is what I like to call a tertiary reaction currency, meaning that there are a lot of other factors at force that determine the price of this. Like, for instance, yen, dollar, and the movements of the US versus the yen is one of the first things that need to be looked at before I would even look at this currency pair. because it's swinging around a lot. Same thing with any relationship between the Swiss and the Canadian and or the US dollars. I would look at those charts first before you move to this. Sort of like a prerequisite. But the range is, essentially 1750 area all the way down to the 1325-ish area, 35-ish. That's the range we're in. So if we break out above this, obviously from the perspective of the weekly chart, this is significant resistance up at the high 17s to the 18 area, even higher. This is on a weekly chart. So if we break above that, we'd have to go to the monthly. And I'd have to bring this down into, so we're looking at multiple years here. A significant range that we're in that has been rock solid for now 4 years. Is that right? About 4 years this range has been on the monthly chart. Pretty solid stuff on this. If this breaks above it, they're going to be tearing some shorts up and chasing higher into breakouts, or breakout into chasing pockets of stops, which I guarantee in some of this longer term stuff for some of these institutions are up here. So it could be a quick burst. If we burst above that, what's the mantra, right? If you're accepting trades with a MAV or a US based versions of these software, you know that historically when there's a big break, especially from a raging area of resistance just under 17 area, above it, statistically win rates are much less for stepping in front of the freight train or trying to go short. All right. And remember, everything is risk-based, guys, based upon can you afford to lose money or not. So, and a couple stories I'll give you real quick before I end this, but so the other question I got, which sort of dovetails onto as I'm jumping around here, go back to the GBP. If we take a look at actually, let me just go to weekly first. Sorry to be jumping around here, but let me get some of these questions answered surrounding Brexit. So we know, maybe I forget what date. I guess I should probably know this. When did they start the whole Brexit thing? Was it, because you'd want to look to see what's going on with these charts back when they first brought it up. I forget when the hell that was. So if somebody would want to ping in there onto the chat window, when did they first start talking about Brexit, leaving the European Union, the UK? Let me know on that. And those are the charts usually you want to take a look at, not really just from a wild reaction standpoint to sort of gauge the potential range we could be in, depending on that. Now, I understand talks have changed a lot and the trade policies and the deals that could be made have changed significantly since then. But I always want to look back to when the event first happened to see what the extremes were at that point. And I'm assuming, if I'm not mistaken, it was right in this area, late spring of 16 into 17, if I'm not mistaken. Yeah, okay. So negotiations started March 29th of 2017. But you notice the market had already gotten some pretty serious whiffs of something going on. And no surprise that again, we're looking at a weekly chart, GBP USD, when and you can almost settle this to the day here. Look, here's the low, October 16. Notice we touched that, blew through it slightly in the pandemic. So note that obviously on the chart how important this just slightly under 120 area is. So this 1.200 area, pretty important. We bursted through, but notice we came flying back above it. tells you there's some pretty serious support above this. I think the thing that's kind of surprising is that, I mean, this isn't a surprise that from the talks, we continued to gain some strength in the value of the British pound through this period of time, but they sort of all gave it back, I guess, just because the deals they're working at aren't all that great. Um, but so just know that I think there's a lot of value to this 36 area. What happens after is going to all be dependent upon how good the deals are that are negotiated, the final deals. I mean, there's a lot of stuff that's on the table, but the final draft, if you will, of most of these trade deals, the only way I'll be able to answer that question is truly what's going to happen is what I see what those trade deals look like. I mean, obviously, if they're favorable for the UK, this currency is going to lift. So it could go all the way to 4,400 for that matter. All depends on the quality of the deals. I don't have time to look at CAD. Hit me up next week on that, but I should probably not look at every currency, right? And that way guys will be like, yeah, Steve's not doing it. I got to get my own charts. That's what we want. Hi, Steve. If the software is shut down for the balance of the calendar year, when would you suggest to re-engage in the markets in the new year and turn it back on? So typically it's the first week of January, first business week, right, of January. Things usually don't get heated back up until the first week. Sometimes it takes 2 weeks. The equity markets usually don't come alive again unless something's breaking bad until usually the second or third week. I think we're going to have some crazy moves in January in a lot of different markets. So I think it's probably going to surprise a lot of people. Not necessarily bad. I could be dead wrong, right? Forecasters are like everybody, right? We all can be totally wrong. But I'm just looking in the tea leaves of these technicals on these charts, and the tea leaves in this case don't lie. So already did the Euro, US dollar, CHF, so we got that. Okay, so do understand, I often get questions about the VIX, okay? And I purposely, this is a measure of volatility, by the way, guys. This is equity market-based indicator, if you will. It's called the volatility index. You can Google it if you want. We're looking at a weekly chart on it, but the daily on it, this thing basically heats up when things get ugly. So it can foretell volatility. I would say this is sort of like a passing type of thing that I want to look at if I'm trading currencies. If this is in a super elevated area, which historically is anything above 30, okay, it is going to make more volatility in a lot of stuff. Currencies, commodities, and certainly the Forex markets, maybe to a lesser degree, right? They trade based on volatility, but it really is moves by central banks, changes in monetary policy, quantitative easing, essentially bringing lots of money printing to primary dealer accounts. It's going to affect currencies of underlying countries and or bailouts, right? Anything that devalues the currency of the underlying country, and debt is a devaluing measure, as I've shown from my Forex cheat sheet that I'd really like to see everybody get into the swing of, which will maybe be easier for so the vote on Brexit was June 2016. No deal is highly likely, as announced last Friday. Yeah, no surprise. Takes a while to get this stuff straightened out. I don't know if you guys remember back in the 90s, some of the problems that they had when they were bringing the euro about. It took years to get that stuff straightened out as far as all of the individual countries coming off their own respective currencies onto a European Union. Took years to straighten that stuff out. VIX, so just know that's the story with VIX. You can see the support and resistance lines. Just know that anything above, arguably, 26, 30 is heightened volatility. Certainly anything up into the stratosphere, if you look at a monthly on the VIX, you could see how high the VIX actually got during the financial crisis. See that? This is an anomaly right here, so don't worry about that in 2000. But see how high it got during the pandemic. These are measures of extreme volatility. Anything up near 80 or 90s, Bananasville. Okay, you don't really want to be trading, but you can. We're looking at a monthly chart on this stuff, so it wasn't this elevated the whole month, right? What are your suggestions for trading view to have on your charts? So I would just have in the beginning, as long as you understand the basics of technical analysis. If you don't, you can always go on Amazon and look up Steve Neeson's book on candlestick charting. He's one of the guys who really brought it to the forefront. It's a good book. There's tons of tutorials out there if you just type in candlestick analysis, which is really just understanding price action. I think it is the core of technical analysis, and it should be understood first, right? Then you can go into a deeper dive on support and resistance lines, moving averages. You can add in a bazillion moving averages if you want. Finally, I think the piece of technical analysis for you guys should be to overlay market profile, which isn't as useful on the charts, but see how useful it is on the S&P or any equity-based index for that matter, right? So this volume is very trackable. It is very solid in its looking at monthly. Let's go look at weekly. Yeah, so this is very solid analysis. Arguably, you can go back even further, as I have. I have everything overlaid all the way back to 18 when we got up into these areas. So you'll have 2 points of control, which is the red line. This represents the center of all trading in terms of volume. Hopefully, these guys will be adding in time. So I'll have an ability to have time-based profiles, which will look like these bell curves, and I'll just post them on the right side of the chart, which will look confusing, but gives us more points of what's called confluence to be able to trade from. I know the developers are trading this week, but understand our communication with Bill and Riley is kind of broken down. So I have no idea, if there's a time period when these guys aren't trading, if you guys are still on Einstein or Alexander. That's the story. And it's their own damn fault. They probably should have communicated with us more as a company instead of leaving us hanging out to dry. You're hyped up on volume profiles for forever, but it is true. It's not as good on FX charts. It's exactly right. Now, the time-based profiles will, if they can get that logged into TradingView, that would actually be helpful. But as the volume, as I've said in many of my calls, among these 14 large banks, volume isn't as dependable as I've illustrated. As if you probably weren't on my calls the last couple of weeks. I've been talking about that. Euro AUD. Let's take a look. What a great guy. I'm way past my time. My wife's going to shoot me. Christmas shopping, we'll have to wait, right? All right, let's take a look. I'll see here. I always start with daily first, right? Look at that tight range. Jeez. Very dependable stuff right there. Very tight. I don't even need to analyze this. You guys already know where the support and resistance points are, right? Look at that. You can write a textbook on how effective this has been. So this 60-66 area, super solid. If it breaks below it, Bananasville, just like I talked about. I would not be accepting long trades on this first break. Notice it peaked under it. Friday, right? Yeah, Friday it peaked under it. Look at that. Came right above it. Not saying it's going to peak under then rip. I have no idea, right? So it's all just me reading the analysis on the charts. But look how solid this area is. So pretty good. All right. So we got that. Just a quick peek through. Thanks for the updates on Brexit. I need somebody to type up When Brexit's going to be settled out, because we don't know the answer to that. Will it drag on for another couple of years? Who knows? All right, so looks like we get everything answered here. You guys want a story on persistence? Let me just cut it off right now. All right. So, as many of you may know, one of the biggest parts of my profession is we write very large insurance, what's called key man life insurance policies for business owners. So a lot of my biggest clients own, in some cases, 1,000 restaurants, and they want to protect the entire organization in case they pass, right? So you'd need a big policy to come in and pay off the debt on the restaurants and or some other stuff related to that. It's probably encompasses a good 50% of what I do in the course of a day. So it's big estate planning cases for wealthy clients. We had a client, we finally got a policy finished for, almost a $25 million policy for him. And he's got every health condition under the sun. The guy's got diabetes, but it's all being sort of taken care of. It's under control, adult onset. He's had a stent put in, but he had a perfusion study done. Don't ask me how I know all this shit. It's just learned from the last 6 months of hell trying to get this guy what's called a standard rating. And he just got COVID 3 weeks ago, right? It was okay. He didn't really have any symptoms to a large degree. He got over it, which is sort of a good thing from an underwriting and risk standpoint. But we never thought we'd ever even be able to get this policy written. He actually wants to write a couple other ones as well, which is good. But we were turned down everywhere. So this reminds me of the KFC story, right? Colonel Sanders selling his recipe 1,000 people when we finally bought it, right? It's the same thing. We got turned down by like every large insurance company in the damn planet. They're like, this guy's not good health. We're not going to give him a standard rating. It's just too much risk for us to spread across our organization. And we kept going forward. AJ lost like 25 pounds. He had all his current meds. He's off a lot of his stuff, still on the diabetes meds, and so forth. And then all of the information that we've had him going to doctors and this and that. I mean, it's really been a completely collaborative effort to try and get this policy written. It was approved for a standard rating on Friday. So this is going to be a hell of a good Christmas. So, in any case, what is the takeaway? Never give up. So those that have lost money in Forex accounts, and there are some stories, there's also some stories that made a ton too. It's nothing different than if you have a 401k and you're making contributions or 457 or whatever they call retirement plans in other parts of the world. The employer may contribute. You should contribute, obviously, if you can afford it. But most importantly is that those accounts will go down in value. But you notice you're still adding money to it, right? You're being persistent in contributions to it, right? If you can afford to lose it is the key here, right? I still think that one should contribute to retirement accounts if you are gainfully employed. And that should be your primary goal for building retirement, right? It's just simple financial planning 101, but a lot of people don't do it, right? At a bare minimum in the US, you should put money in a Roth. Depending on your age, you could put between 5 and 7 grand in a Roth every year. Set up an account at Schwab or E-Trade or TD or wherever, and begin to trade the account. No, you can't trade Forex with your IRAs. You can, but there's this whole process to get it done through a trust custodian. It's kind of a mess. But you can do it technically. I wouldn't, I'm not going to instruct anybody on how to get that done. But what I think it's important is, do the savings, do the allocations. And then if you have extra capital, you could save up, you could trade in Forex. Or if you're making a lot of money in Forex, you can contribute to your retirement accounts. So the point is that accounts go down almost always over time, right? So typically the market will go down a third or a quarter of the time, then it'll be going up 3/4 of the time. So if you have a long-term time frame, you should always do a dollar cost averaging, if you will, of investing. The same thing should be applied to Forex trading. We've seen too many people come in, they don't pay enough attention, they're lazy, they're not willing to go through with something as simple as our onboarding videos, and then they'll put, some money in an account. They'll trade a demo for a couple of weeks. They'll go live and they won't pay any attention to the settings. They think it's some sort of set it and forget it, and the account gets blown up. We have no sympathy for you. We really don't. And I know that can be kind of harsh, but tough. You should have really gone through the videos. And we try really hard at this organization, everything from a compliance perspective all the way down to some seriously deep coaching, to calls from the developers. And we really have tried exceptionally hard. I've never seen this in an organization, this level of commitment to education of subscribers. If you don't take advantage of it and you have a losing situation account, we have no sympathy for you, and you're taking too much risk. And in some cases, many of the cases I've come across, they've been ill afforded to be able to lose it. But all that being said, now that I've sort of slapped everyone around, you can come back and put more money in a Forex account, right? You can always add more money, learn from your mistakes, right? How many people out there, there's just tremendous stories from Grant Cardone to everybody that these guys have been just dirt poor or gone bankrupt twice, right? And they've come back from her 3 times. Hell, I know somebody that's gone bankrupt 5 times using a plane crash. He's damn near a quadriplegic, but the guy's a successful business guy again. Why? Because he had the fortitude to come back. He learned from his previous mistakes, right? And now he's moving forward. So I'll leave it at that. So more like a whole year, as if. In any case, that is the story. Hope everybody has a great week. Thank you for listening to my long diatribe, my tangential paths that I take us down. But I promise you, it will bring about a risk management mindset, and that is really my only goal. So everybody have a great week. Stay safe. If you're celebrating, drink heavily tonight. I recommend it. I will be. And I'll see you guys all on Tuesday. May trades be with you.